Hi, everyone. Welcome. We're just going to give it a couple minutes. How did you know my phone would ring right when I'm starting to talk? We're just going to give it a couple minutes just to give people time if they're running a minute behind, but we won't delay it too much. So just 2 more minutes and then we'll get going. Just going to give it 1 more minute. Welcome. Welcome to our webinar. 1 more minute and we'll get going. Okay, well, welcome to our first Building Better Business webinar of 2025. I'm Kristen Johnson, Director of Communications at Better Business Bureau serving Connecticut. Today's topic is preparing for resiliency in times of economic uncertainty. We'll be reviewing the business and economic landscape of the last few years and how it's brought us to where we are today with challenges such as inflation and hiring. And then we'll discuss how you can prepare for future uncertainty. And if you have any questions, please put them in the chat and our speakers will answer them at the conclusion of their presentation. With us today are three representatives of Chelsea Groton Bank. Anthony Joyce is President and CEO. Jessica Todd is Executive Vice President and as CFO. And Richard Bellistrassi is Senior Vice President and Commercial Lending Department Manager. Thank you all for being with us today and for sharing your experiences. I'll let you take it from here.
All right, good afternoon. I'm Tony Joyce, President CEO, as Kristen said. The way we're going to handle this afternoon is I'm going to just make a couple quick opening remarks, and then I'll turn it over to Rich for the bulk of the presentation, and then Jess and I and Rich will all handle questions at the end. Wanted to make sure we had enough people on the program today to be able to answer any type of questions that may pop up. So just a couple things we're hearing from our business customers and things we're watching ourselves in today's environment. Obviously, the new administration coming into play. Your guess is as good as ours as to where everything is going to settle out. But right now, we're focusing on just being prepared for some funding cuts. Seems pretty evident that some of that's probably going to work its way through everything. So, basically, if you're at all dependent yourself, obviously, on funding cuts, but vendors and customers as well, we're trying to make those sort of assessments now and try to plan accordingly for that. As far as interest rates go, again, we thought we had it nailed pretty well, but there's a lot of counteracting forces right now. So I would be disingenuous if I told you I knew where interest rates are going or thought I even had a really good idea at this point. We had thought they were going to be dropping for the year, but I'm not so sure that's the case. A couple other hot topics we're really focused on here is cybersecurity and fraud related there too. As far as what we're doing internally and recommending to our business customers is make sure you're aware of the clickers you may have in your company. If you have, in your network, we've seen incidents of malware when people click on bad links, and we've had the bad guys just, sit, wait, observe, and then strike. So, if we do a lot of cybersecurity training in-house here, would recommend you guys do the same thing. Like the the downside effects can be, pretty significant and catastrophic. The other topic du jour, when related to cybersecurity, is AI. The advice we're giving is just make sure you're aware of AI vulnerabilities. It's a great tool. We're utilizing it in-house. We're encouraging our people to do it, but we have a closed network. So anything that we do stays in our network. It's important to notice to know if you're using AI in your business and you don't have a closed network, anything you put into ChatGPT or Copilot or I forget Google's product Gemini, it can end up in the great wide open out on the web. So be very careful with information that you expose to AI in your businesses. We're also seeing an uptick in good old fashioned check fraud, low tech fraud, as we call it. It's critical to review and reconcile your checking account activity daily, almost, but frequently at the very least. We've seen, with a decent desktop or laptop PC and some not so sophisticated software, people are able to wash checks, which, they've been pulling out of mailboxes and, just getting their hands on from a number of different ways, changing the amounts and the payees, and then putting them into the system. And there are tools for that. And this is not a Chelsea Groton commercial, but there are products you can get, and we're strongly recommending this to all of our customers. The one we use is Positive Pay, but there's other variations out there. And what that does is when you write checks and send them out, you upload a file to the bank, and the only checks that can clear against your account are those that match the file that you uploaded to us. So it's an extra measure of prevention. And the last thing I'll say is, it may sound elemental, but make sure you establish a good relation with your bank and your banker, whoever it is. We have a lot of tools that we can do a lot of good things. We can generate a lot of help to you, but it's much easier when the relationship's already established. It's much harder when you're in a time of crisis or need. So I would encourage you, whoever your banker is, make sure they know you, you know them, and you're familiar with their offerings. All right, well, I'll turn it over to Rich. He has a presentation I'm sure you'll enjoy, and then the three of us will handle questions at the end. So Rich, take it away.
Great. Thank you, Tony. Thank you all for joining us today. Very excited to share some information with you. And as Tony talked about, there's a lot of changes that are happening on a daily basis, and kind of keeping abreast of those and understanding where some of those risks are and how those could potentially impact your business are kind of the focus of what we really wanted to talk about today. So we'll kind of jump in a little bit, first just talking about kind of the current state of affairs, where things are today. And when you think about key metrics, the Fed, two of the major mandates that they've been talking about consistently have been unemployment rate and inflation. Those have been the two drivers that they've really been focused on as they're looking at making any tweaks to their economic policy. So if you look at where the unemployment rate is now, I mean, we're currently at a 20-year low for where we are today. For the most part, extremely strong numbers on the employment side of it. There are some sectors that have some varying degrees there, but that's important in the context of, if you think about economically, our gross domestic product, or GDP, roughly 70% of that is driven off of consumer spending in our economy. So typically, strong employment numbers bode typically well for consumer spending, which in turn fuels a lot of the economic growth that we have throughout. Now, the caveat to that and the counterpart, and this is why it's another big focus, for the Fed, is also inflation. I'm sure everybody's heard some of the headlines, particularly talking about egg prices and things like that, that impact the other side of that equation, because you've got the income side for what the employment numbers are doing, but then for consumer spending, what's the overall impact as you experience increases in the cost of goods and services that you provide. So this was just a quick chart. I just wanted to show historically where some of the inflation numbers are. And it's very interesting. If you ever want to go, there's actually a very dynamic tool with the U.S. Bureau of Labor Statistics where you can actually drill into specific areas of inflation, broken out by category. So what I highlighted here in the chart, inflation right now, it's at 3%. I'm sure some of you saw the headlines this week. It was slightly higher than what the market was projecting the January CPI to come in at. But just a couple that I noted that were higher than the average. Shelter, I think we're all well aware. We've seen, rising increases in terms of rental, housing prices. Food away from home, I thought that was interesting. That was another one. So when you think about people going out to eat at restaurants and things like that, that's an industry in particular that's been, hit relatively hard with inflation from a cost side on operations, and then other general services, less energy. So, some of those are interesting to kind of dig in to see where some of that inflation is and where that's trending over time. But again, there's a very dynamic chart that you can go into and kind of show where each of those inflation numbers are, because the whole focus is you just want to understand where some of the inputs are on the business side as you're running your operation. Where could those increase your costs? Or, sorry about that. On the flip side of it, what are your potential buyers or customers facing on the other side? And then, as Tony alluded to, big question we get as bankers all the time is, where are interest rates going? So obviously, having the crystal ball and trying to predict where they are and where those are going, nobody really knows. We started out this year looking at different metrics and thinking that there were going to be a certain number of Fed drops, but obviously that changes. There's a new administration coming in, talk of tariffs, and ultimately they drive back to the Fed's mandate of managing, what does the employment look like and what's the impact to inflation. And ultimately that's what's going to drive to all of that. So basically, in a nutshell, that all kind of boils down to the only thing that we really know with any certainty is that you can expect change. And that's really all we can plan for. So from a business owner's perspective, the key, and we've seen a number of businesses look at this kind of going forward, is when you look back at the last few years, a lot of these topics aren't unusual or uncommon for things that we experienced going through kind of the pandemic years as well. So the key to managing the company is figuring out, well, what can we learn from that, and how can we implement some of those key learnings into basically building some resiliency into our operations, so you're not as impacted by if unemployment increases and if inflation's impacting your costs. How do you pivot and kind of reposition your business to continue moving forward and continue on the track that you're on? So again, over the last few years, and sometimes it's funny, just talking about COVID and the pandemic years, it's like almost like ripping a Band-Aid off and trying to revisit some of these burdens that I think all the businesses have kind of gone through over the years. But you think about, supply chain disruptions, economic uncertainty, digital transformation, which again, that's moving at light speed right now and really picking up quickly, as Tony had alluded to. Increased cybersecurity threats, wage inflation and challenges with talent acquisition and retention, work from home, return to office, the geopolitical climate, and then again, inflation. These are all challenges that businesses have been navigating now for a couple different years. And some of these may have been for different reasons over the last few years, but the risks still persist. So again, trying to figure out, how do we look at the lens of kind of where we are today? What are some of these risks that we're facing, still facing today? And how do we position our business to best be able to remain nimble and navigate these as we move forward? Because again, going back to the theme here, I mean, the only thing that we can really expect is ongoing change. So being able to understand where we are and how we reposition for that is kind of essential as we navigate these risks. The other lens that's important to kind of take a look at these through is where are you in your business life cycle? A business in a growth stage may look at a particular risk very different than a business that's in the maturity phase. The growth phase, you may be focused in a little bit more and in tune to maybe some of the advancements in AI and some of the new technology that's coming out. Where a business that's in a mature life cycle, you may be focused more on maintaining margins and focused on efficiencies. The key to it's kind of looking at where you are in that cycle, because it's very possible the mature phase business may be needing to see, well, what are the growth phase businesses doing? And how do you stay relevant and keep ahead of that curve? Where the growth phase is maybe looking at how can I optimize this and find more efficient ways to compete on a different level. So again, everybody's going to be looking through these through a different lens and figuring out what's the right way to kind of plan and position your business. And I think the key to it's really trying to focus on how can you remain nimble, because again, nobody really knows what to expect or what some of these impacts will be. But remaining nimble and having the ability to be nimble is important to kind of being able to navigate a lot of these challenges. So the first set, we kind of wanted to talk about was preparing for a resilient balance sheet. We always have different components of our business that we're looking to manage. You've got your balance sheet, you got your income statement, and your operations. So trying to figure out, what is going to position your balance sheet to give you the most flexibility as you move forward. Number one that we talk about a lot is optimizing working capital. A lot of people don't realize one of the biggest challenges for business isn't always a profitability or lack of profitability risk. It's actually managing that cash flow cycle is really what can make or break a business. And actually we see oftentimes that's one of the bigger hurdles for a business to clear whenever they hit any type of challenges. So the key to optimizing your working capital is really reducing your cash conversion cycle. So if you're a manufacturer, for example, you have inputs, you've got to pay for raw materials, you got to pay for goods, you got to pay for labor, your overhead, as all of those things are flowing in. And at the same time, you may not be able to sell that product until that product is fully manufactured, comes out of the manufacturing floor, gets shipped to the retailer. And even then you may have, 60-day payment terms with that retailer before you actually see that return on investment coming back into the company. So looking at ways to shorten that cash cycle gives you more control so that in the event there's, some risk that happens, some change to the economy, some change to your buyer spending habits, cash in the pocket is sort of the number one thing that's going to drive your ability to remain nimble and be able to react, and keep the operation moving forward while you reposition or make any changes that you need to. Looking at everything, if you look at the receivable side, what are your payment terms with your customers? Are you offering discounts on those payment terms? And then same thing on your payables. How quickly are you paying your vendors? What types of terms are you taking advantage of? Is there any room in there to optimize any of the margins, whether or not there are discounts involved? All of those things are factors that come into play. And keep in mind, as you're negotiating some of those things, what the potential impact to your revenues could be. We've seen a number of businesses that were able to grow their revenues by offering more favorable credit terms to their customers. And the key to making that happen is you've got to have enough cash on hand or the right debt structure to make that happen. Conversely, we've seen other customers that maybe didn't have the necessary capital cushion to have that same type of flexibility. So what they focused on was more in terms of driving the revenue growth by competing on price, but they got paid quicker, so they reduced their cash conversion cycle. So those are a couple things to be thinking about. And again, these are recommendations that, there's sort of no magic bullet that's out there and available. it's going to miraculously find the right solution here. This is just things that we want you to think about as you're looking at your business and finding, well, what's the best way that you compete in the market, and what's the best way to help kind of create some of that ability to pivot with your balance sheet. Second, this ties into that optimizing working capital, is maintaining adequate liquidity. Sorry, just getting over a small cold here. So what is your optimal liquidity as you're kind of navigating your balance sheet? How much cash on hand do you need to have to make sure you cover, any type of overhead that you have, ongoing expenses, meeting payroll? Cash can be twofold. I mean, you want your money to work for you. You don't want cash typically sitting idle, but on the same token, it's sort of a necessary evil. You need to have it on hand to be able to pivot and maneuver as needed. The other point that we want to make is diversifying your funding sources. So when you look at your total capital structure, what is the right combination of debt and equity? You want to make sure that you're retaining enough profits into the company to, continue to grow your liquidity, provide flexibility in your working capital, but also using debt appropriately and making sure that you're using, short-term funding sources for short-term funding needs. So if you're funding, asset conversion, such as receivable turnover, you want to make sure that's well matched, typically with something like a short-term line of credit. And conversely, if you're funding long-term assets, you also want to make sure that's matched appropriately as well on your balance sheet. Managing debt effectively. This is the thing that, obviously the most nimble you can do is have no debt at all. But that's an extremely conservative approach to managing your balance sheet. So finding that right balance of managing that debt effectively. And again, it really drives down to looking at what your overall capital structure is, and what those funding needs are for your business. Making sure that you've got access to liquidity. So whether that's a cash cushion that you've got in terms of a cash reserve, you've got a line of credit that you can fall back on, something in there that would give you some flexibility, so that in a pinch, if let's say one of your vendors takes longer to pay than expected, you have some fallback to be able to fund those ongoing fixed costs that you're carrying. And the last point, and this is one that we find a lot of businesses either aren't aware of or it doesn't get talked about often enough, is protecting your assets. So by this I mean the obvious one that everybody's aware of is your physical assets. So people think about real estate, vehicles, equipment, things like that, and think about in terms of hazard insurance. But as Tony alluded to early in the presentation, the rise in fraud, what do you have for fraud protection measures built in? Do you have any type of insurance that can protect you from that? Business interruption insurance. We've seen a number of, whether it's a weather event that closes down the business, or any other type of impact, we've seen it time and time again. That business interruption insurance can help bridge that gap if for some reason you're out of business for a period of time. And these are all things that, need to be explored and, are just more ways to protect yourself, because again, it all kind of flows into the overall strategy of how you're positioning your balance sheet in terms of preparedness for what could possibly happen. So next we'll talk a little bit about the income statement. And a lot of this I'll say drives ultimately, I think, back to your business plan. And just as an aside, can't reinforce it enough that how important it is to have a plan and constantly revisit it. We see it time and time again where, if a business writes a plan, it may go and it may, get put on the shelf. But the important thing to that plan is that it does get revisited periodically, updated for changes, and a review of, what's working and what's not. So first and foremost, I think having a good understanding of what impacts your revenues. So when we look back earlier in the presentation, we talked about inflation, what that does to your costs, what that does to the price of your goods. what are the key drivers for your revenue stream? Is your business dependent on consumer spending? If so, that CPI number might be a good indicator to kind of follow and understand, what are the consumers that you're selling to? What are they facing in terms of decisions every day of, what's the trade-off? What am I spending my money on? Which also kind of leads into what's the price elasticity of the demand for your product. So, just looking at it from a standpoint of if you were to increase your price, what does that do to your sales numbers? If you've got the ability to increase your prices by 10%, and it's only going to impact your revenues by decreasing them, say 2%, odds are there's a net benefit to increasing your prices. If you find that cutting your prices, I'll do an exaggerated example. If cutting your prices 2% can somehow double your revenues, well, it's going to be a huge addition to your bottom line to be able to do that. So understanding those tweaks in prices, because again, if you're starting to see inflation start increasing, consumers start cutting back, and you start to see your revenues slide, how do you compete with that? Is that something that you have the ability and enough flexibility to play with your price and quantity of whatever product or good it is that you're producing? It's oftentimes for a small business owner, a lot of that's more art than science. It's just understanding the market and understanding what your buyers are looking for. A lot of it comes down to having good relationships and being able to get good feedback from your customers to know what it is that they're looking for and where those sensitivities are. The other point that I want to make, especially about managing an income statement, is how sensitive is your business to operating leverage? So operating leverage for a business is really kind of the balance between your fixed and variable costs. So if you're a business that has really high fixed overhead costs, when you're looking at it through that lens, you have to produce a certain number of sales in order to kind of hit that break-even point. And typically when you do, everything after that has a high, falls to the bottom line and generates a strong profit. But if you have a very low fixed overhead, conversely, you're basically making more of your profits on the margin, and you've got a lot more flexibility to kind of scale your revenues based on whatever's going on in the market. So just understanding what that relationship is really is what gives you the ability to kind of react to some of those changes, whether it's changes that are going on with the administration, changes with public policy, geopolitical environment, you name it. Understanding what that balance is, because if you have high fixed costs, you need to make sure that you're managing that P&L, because you've really got to hit that break-even point, has got to be your focus there. And then just in general, and this is just sort of a good point just for ongoing operation, is just always be looking out for operational efficiencies. There's ongoing technology is evolving very, very quickly. Where can you be more efficient? Where can you reduce costs? That's something that as business owners, you're always kind of in tune to and looking for. Sometimes it's a matter of just being able to react quickly and being able to take advantage of those efficiencies and implement them quickly. So then the third component that I wanted to talk about a little bit too was just risk management in general. I mean, when you talk about building resiliency into your business and understanding where potential risks exist, everything that we do as operators of businesses really drives down to risk management. That's really what it boils down to. So a few things, especially in light of discussion about tariffs, economic sanctions, different events that could happen geopolitically. What does that do in particular to your supply chain? We've seen an evolution, especially over the last few years, where the supply chain disruption was driven largely. There was a lot of shipping logistics and hurdles that were involved. with that supply chain, there's a number of different reasons that a supply chain could be impacted. So in the event it is, what do you do in a position where maybe you're having, issues getting, the raw materials to manufacture your product from a particular area? How do you pivot and keep the operation moving? And what we found is a lot of business owners have started to pivot and, diversify that supply chain. Are you overly reliant on any particular vendor or supplier? If so, are there other alternatives available? And how quickly could you pivot and move to another supplier if you were forced to, or if you really needed to? It's important that when you look at your business plan, do you have those contingencies in place and the ability to kind of pivot throughout? Explore digital solutions. This is something that, again, as AI continues to progress, that's really taking off at light speed right now. There's actually the administration stance through some of the recent executive orders that were signed, basically limit some of the barriers to utilizing AI as well, because the whole intent is to try to see, well, where can we explore some of these efficiencies, and really pull us into the new age. And when you look back in time, every time there's been a big shift economically, it's usually been driven by a technological advancement. I mean, we've seen it time and time again, historically, and AI looks like it has the capability to be that other game changer in how we operate and what we do. But to Tony's point, you want to make sure that you're using it responsibly and you understand the risks that are involved in doing so. So again, exploring any of those digital solutions. Are there ways to improve your internal reporting? Find new ways to better serve your customers. Those are all at the advent of a lot of these new digital solutions that are available. Are you protecting again from cybersecurity threats? How is that protection in place? Again, using things like positive pay, are some ways that you can kind of protect yourself, but then also just your internal software programs. We've seen customers that have had more ransomware attacks, and things like that. And as a business owner, unfortunately, you're caught in a difficult position because you've got a company to run, you've got payroll that you've got to make. And unfortunately, those ransomware attacks, they hit at a cost benefit standpoint. Are you forced to pay the ransom to unlock your software and keep the business moving forward, or do you incur the costs to rebuild? Unfortunately, we've seen a number of businesses caught in that exact dilemma, where, as much as you can, unfortunately, there's costs to doing this, but, prevention is really the key in understanding what those risks are and how you can best protect your systems up front so you're not ever caught in that type of a situation. Attracting and retaining talent. That's something I think that we're going to be dealing with for a long time. And I put the emphasis on retaining talent, just because it's one thing if, it's enough of a battle to try to get the right people in the door. But, there's a lot of competition out there for employees. And it's particularly for a small business, the relationships that they build, the value that they add to your company, the efficiencies that you get out of them, finding ways to making sure that, not only are you attracting that talent, but finding ways to retain them, and understanding what's important to them. It's something I can tell you, from our perspective at the bank, we're constantly trying to evaluate, what is it that employees are looking for? What benefits do they value? What types of flexibility are they looking for in their work-life balance? Understanding all of those things and how does that come together for a package that works for you and the employee? Because as we saw, the labor market is extremely tight. I mean, there's not a lot of wiggle room there. There's not a lot of, unemployment's at, near 20-year lows. So those employees really become key and essential to your operation. The other point, we kind of touched on this a little bit with supply chain, but understanding your vendor reliance. I mean, this ties also back into the cybersecurity. If you're overly reliant on any particular vendors, they could also their businesses are facing these same threats as well. So if you're overly reliant on a particular vendor and they face a cybersecurity threat, well, what does that do to your business, and how do you react and operate in a way to move forward? So again, it's not saying that these are all risks that you need to run screaming from, but I think these are all things that you want to be cognizant of, aware of, and kind of be thinking about, well, if this happens, what do I do and how do I react when I'm managing my business? Again, another point, just touching on, the advent of artificial intelligence and how does that impact you? Maybe there's not an immediate need, but you also want to be looking downstream, because as we looked at the business life cycle, if your business isn't using AI or it's not available, there's a good chance that there's some companies in that growth phase that probably are. And their hope in the growth stage is probably, how can I use AI to reduce costs and compete with those mature companies? So as a mature company, you've already got the advantage. You've got the market share, presumably the capital to be able to do something to compete, but you have to understand what are the companies planning for ahead so that you can kind of stay ahead of that curve a little bit and kind of change with the times as you move forward. And then lastly, just touching again on the geopolitical environment, what is the impact of tariffs over a particular country? What does that do to your supply chain if there's sanctions placed? All of these things, monitoring just what's going on and understanding what comes, or what the potential impacts to your business could be. It's a lot to kind of keep up with and monitor, especially as a business owner who's pulled in a lot of different directions and wears a lot of hats. But staying ahead of these things and understanding, what risks are there and how those could potentially impact your business is also what's going to kind of help, again, build some of that resiliency and the ability to respond and react quickly in those scenarios. So lastly, I'd just kind of summarize it with, it's virtually impossible to have that proverbial crystal ball and understand, what exactly is next. What should we be prepared for? What should, which direction is the economy even going to go? The key to it's really just understanding where the risks are in your business and your operating model and figuring out how do you best plan to be prepared to react to these. Because again, we don't know what to expect. But being nimble, I mean, that's the big advantage that, a small business really has, is being able to be nimble and being able to react quickly in these situations. And then also, what can we learn from our experiences? Because again, some of these risks that we talked about today are the same risks that have been there for a couple of years. Just some of them may have accelerated a little bit more, or they may be caused for a different reason, but the risk is still the same. So understanding, well, what did we do to react during that time period? What worked well, what didn't? And how do we take those lessons and kind of apply them to what's happening today and understand how do you move forward with that direction? But I know we wanted to leave it plenty of time for some Q&A, just because I know a lot of the topics we talked about, this is sort of a broad overview and broad spectrum of different topics. But the key is every single one of these is going to be different and individualized based on your business. So with that, we just wanted to open it up and see if anybody has any questions. We'd be happy to answer.
We'll give them a minute to write in. I have a question. Why are small businesses more vulnerable to times of economic uncertainty than a medium or a large size business?
I mean, I would say, from a small business perspective, there's a couple different challenges, but I'd say, a small business in particular, the owner's wearing a lot of different hats. I mean, you're pulled in a lot of different directions. I mean, the topics we talked about, these are a lot of different areas that the owner needs to really be able to juggle and manage. It's a lot. you know, where you go to a larger company and it's, you know, they may have one person focused on, you know, just cybersecurity risk, or one person just focused on talent acquisition. For a small business owner, you know, they wear it all, and it's, you know, it's same thing. It's a great risk and reward. It's a lot to manage, but it's also the great part of being a small business owner. You get to wear all those hats and understand where all those risks are and navigate it in the way that makes their business unique.
Okay, we do have a question in the Q&A. It says, working for a Connecticut-based technology solutions provider, we are witnessing a significant number of cyber attacks targeting small to mid-sized businesses. These incidents often don't make the news, but a few can have devastating impacts on hardworking individuals. We frequently get called in post-attack to help mitigate the damage, and it's heart-wrenching to see the aftermath. Are you also seeing an increase in questions and concerns about cyber attacks, specifically regarding prevention and response strategies for small to mid-sized businesses? What solutions or advice do you share for those asking?
So yes, we do. We're seeing a lot of that. And the best advice we can give, and it's advice we're taking ourselves, is training and prevention. I mean, the biggest exposure any company has is its employees, right? The clicking of, and people are bombarded with emails coming in, often from vendors and customers or potential customers. You get a lot of offers that if it sounds like there's an urgency to something, or they're asking you to download something right away, beware the click, because that's where the biggest vulnerability lies. Because that's where the malware comes in. Oftentimes you don't even know someone may have clicked months ago, and we'll see the bad actors sitting idle inside somebody's network, just watching, waiting, picking up a pattern, and then they pounce. We've had incidences within our own network where we've had somebody wait and watch for a wire transfer to go out as part of a closing. It was actually the attorney's network was compromised, and then somebody watched and sent us an email saying, "Oh, we changed our wiring instructions for this closing. Send it to this new address." Fortunately, our person was well trained and said, "But it doesn't sound right." They wouldn't do that without letting us know, so verified it independently. But then they interrupt the routine things you do every day. So it's vigilance, it's training, and then training and training and training. And as Rich pointed out, there are tools in the worst case scenario. The cyber insurance, it's not inexpensive, unfortunately, but it can help you after the fact. Once the bad situation has already happened, it can help, they can guide. They often give you a coach for, if it's a breach or you have some sort of a denial of service attack. So there are resources out there, but we can't emphasize enough. It's diligence, vigilance, and training.
And another cybersecurity question, which you may have just answered at the end there, are there some programs you recommend for cybersecurity, especially with employee laptops?
We use and this will be a little bit of a commercial, and we're not endorsing anybody, but we use a company called KnowBe4 that it's the word know, be, and then the number 4. And they have classes that you can get, training materials, best practices. We find them very helpful. We require everybody that we train monthly, was even more frequently, but now we've tried to increase the level of the attacks, level of the potential threat, just to have people prepared for what they could see and what people are seeing out there. So that's one company. I'm sure there's many, but there are a lot of vendors out there that can help you with that. And again, it's a form of insurance in addition to the actual insurance, and it's often one of those ones that's easy to avoid, but when it happens, it can be bad.
And since we've gotten 2 questions on cybersecurity, I wanted to let you all know that we actually did a building business webinar, Better Business webinar in October for Cybersecurity Month with a cybersecurity expert. That's a accredited business, and Matt has put that link in the chat. So if you're interested in watching that, it was really focused on businesses and cybersecurity for business. So that might have some answers for you and some useful resources. So that's there in the chat. But we have another question. It says, I realize you need a crystal ball to project interest rates, but do you see any lowering of mortgage rates during 2025?
Well, mortgage
the-
rates, go ahead, Rich. I'll let you take this one.
Oh, I was just gonna say, I mean, it's interesting, following mortgage rates, because it's really driven off of the 10-year treasury is really the main driver for mortgage rates. So it's a little deceiving when people see the Fed start decreasing the short-term rates. The assumption is that mortgage rates will follow that. But the market right now, you're seeing, kind of competition really for dollars from an investment standpoint, number one. So whether people are investing in the stock market or investing in the bond market, it's another supply and demand equation. So, as demand for bonds potentially increases, that'll be a driver for rate. The other factor is inflation and what the outlook is, for where that CPI number is going to go. Over the course of the year as well. So as you see that 10-year treasury increase, I mean, that's the market responding, expecting inflation to increase. And that's ultimately what's going to drive a lot of the, setting the mortgage rate in there. And it's difficult because, on the one hand, you can talk to some economists that look at, the discussion of tariffs, for example. There's one camp of economists that look at tariffs as being inflationary. There's another camp of economists that say, well, if you use a certain way, maybe it's not inflationary. So it's difficult to really know and predict exactly where they're going to fall, particularly while the new administration's in, ramping up what a lot of these policies are going to look like. So for us, I mean, we're just kind of planning for either reality. As we kind of look forward of either rates moving up or down in the mortgage market. I mean, obviously for home ownership, rates and affordability, to get homeowners into houses, we'd love to see rates fall and see more people be able to buy homes and things like that. But it's I'm sorry, it's not a black and white answer. But that's kind of where we're at now. And Tony, I don't know if there's anything you wanted to add to that.
No, I just thought it was important to point out the different bases. The Fed funds rate is a short-term rate, and as Rich pointed out, the mortgage rates are based on a longer-term rate. So there's not necessarily a direct correlation between the two. But those are the two indicators to watch. If you can start to see some movement or hear some noise about either the 10-year or the Fed funds rate, now you can at least gauge the type of borrowing that you're doing. The shorter term stuff, your credit lines, home equity lines will be more impacted by the Fed funds rate. So it's important to know the distinction between the two.
Well, that appears to be all of our questions. Anything else that you guys want to share with us before we wrap up?
Well, just again, emphasizing, make sure you establish a relationship with your banker because it's going to be bumpy waters ahead, I think, until we see some clarity in all of these conflicting factors here. So if you don't have a credit line, now's the time to talk about one. And can't emphasize enough positive pay or some equivalent product from a fraud protection standpoint. Those are the pain points that we're seeing every day, literally every day with our customer base. So,
well, thank you so much. Thank you for the insightful presentation. Great discussion to follow. I hope everyone took something away. I'm sure they did. This will conclude today's presentation. A link to what you've just heard will be emailed to everyone who signed up. but you can also go to our YouTube channel. I've put that information in the chat. It's at BBB Serving CT, and that's where you can rewatch it. We also shared the link to our previous cybersecurity webinar. And that handle at BBB Serving CT is actually our handle for all of our social media platforms, from Facebook to TikTok and LinkedIn. So go ahead, check us out, give us a follow or a like. And you can also learn about our upcoming webinars and events at bbb.org/CT. That's also in the chat, including the upcoming launch of our new co-working and conference room space in Cromwell called Ignite. Hopefully one day in the near future, we'll be able to hold more events like this, but do it in person in that new space that will be opening up later this spring. And you can keep track of those developments again at bbb.org/CT. But again, thank you so much to Tony, Jessica, and Richard for spending some time with us today and sharing such helpful advice. And thank you to all of our guests who came to listen. Have a great day.
You're welcome. Have a great day, everybody.